Hello, everyone. Welcome to the stock specific class here for Thursday, March the 17th. Happy St. Patrick's Day to everyone. Hope you're wearing green today. As always, if you have questions during the week or any questions I don't get to during the class, make sure you send those to jerry@traderspro.com. Now, the market was setting up perfect for getting what I was hoping for, which was another pullback after the Fed made their announcement. The candle was a nice bearish reversal candle, and then right at the very end of the day, it rallied right back up. And then today we had a little bit of a lower open, and we've gone higher. I'm not fully trusting the rally, but I've got to be careful because price is truth. Whatever the direction the market is moving in, that's what it's moving in. As a trend follower, you've got to, if your analysis is expecting a trend reversal, but you're not getting a trend reversal, you got to get on board with what the trend is. So I'll show you the reasons why I'm a little bit skeptical. And sometimes when I get in those when things like this happen, I'll just wait for, instead of jumping in on a day like today, I'll just wait for an extra day or so just to make sure. What really adds to the skepticism is just the history of Fed announcement weeks. Those of you that have been trading for a while, you know exactly what I'm talking about. You get a lot of false initial moves, meaning that the rally at the very end of the day yesterday, the rally today, very often a few days later, you'll get the true move, which could be a move down. The problem is, like I said, I just don't see it yet in the chart. Now that may show up if we start fading into the close and close near where we opened today. It'd be a great bearish reversal. I would jump on that and trade that. Or if you're just looking for long positions, you would just wait if you saw something like that. But I'll show you what I'm talking about when we look at the charts. So direction alerts. Again, what I was talking about on Tuesday, I wanted to see us get more into that extreme reversal risk range. We didn't. And again, like I talked about on Tuesday, the problem then is this rally is probably just a rally setting up for another move down. So, that's the thing is could we rally for a couple more days, or could it look like we bottomed and start taking off again? Yeah, it could. But without that panic sell-off that I keep talking about, it's hard to trust the rally. So, that's why, it seems weird that I'd be so pessimistic that we're up today, but it's because I know that you get that flush out move, and man, I get confident in buying in those situations because I know we're near a bottom, and I can start getting aggressive and start putting that money to work. It's just what's sitting on the sidelines for a while now. So these didn't get down. They're in the trending range. They're in the kind of the middle range here, the hold range here on momentum. Complacency again is still really high. I'll talk about the VIX here in just a second, and some things that are going on with the VIX that I think are worth paying attention to. Now from a buying standpoint, if we are going to be trending up from here, if we have bottomed, we're not in an overbought state. So if we did want to wait for a little bit more confirmation to get into this latest move, you could. You're not buying into an overbought condition, and so and that's what I look at sometimes. It's like, if I miss part of the move, waiting until I'm comfortable getting in, that's okay. It's there's a price to pay. You're not going to be making as much as if we do continue higher, if I would have gotten in today, I'd make more money. I would have made more money, but sometimes you have to weigh that into your decision. Do you, because you want to be comfortable with where you're getting in. You want to be confident in where you're getting in. Now, I'm going to go over some charts though that I think you could get into, because I think I've been talking about them. The oil stocks, I think, are still have another move up, or could still rally here. The aerospace, defense stocks, they're looking really good today, and they made the move that I was kind of waiting for, anticipating. I'll go over those with you today as well. And I think I have a lot of confidence getting into some of those trades right now. But as far as getting back into Apple or Microsoft and some of the big names that we're used to, well, a lot of those have really lagged the move today. They, some of them have barely been able to get above yesterday's highs, despite the rest of the market surging. So that's something worth noting. All right, so let's get to the charts and take a look at some of the things I'm talking about here. Now I go back to. I'm going to go back to what I talked about, the area I've been talking about for a while now, which is down. Let's see here. Hold on. So let me go to a little bit longer term chart so we can kind of see this here. So on the SPY, I've really focused in on this 420 area. Actually, probably up a little bit more than that, right into here. You had resistance back in here, support. You had a big bullish reversal day right there. We closed the day and then had the big bullish reversal candle right there that we've been focused on. And then up here at about 428, you have support there, support here. That was the top of that big bullish reversal candle. We were stuck in this range right here for the last, like week to 10 days or so. It was just kind of back and forth. Now, yesterday we did get a breakout above that range. However, what I was a little bit concerned about yesterday was that there's a downtrend line right through here. We're still hitting, today now we've clearly moved above that. So today, here's where we opened. We opened lower and then we've surged higher. If we were to give up that and come back all the way back down, and you create one of these tails like this and close, we don't even have to close lower, even if we close still higher. But let's say we came back to yesterday's close, and that's where we close today. That'd be a very strong bearish reversal, because you'd see the buyers giving up the gains. You'd be back to that trend line right there, and I think that would be significant. Now, I don't see any signs of that. I'm not seeing any signs of weakness right now, and I'm not anticipating that's going to happen. But if that were to happen, I'd be pretty confident at that point that we're going to get a pullback. Now, another area I did talk about and that we'll have to pay attention to is going to be this high right here. We've had lower highs during this drop and lower lows, and that was the last lower high. If we break out above here, now we'll have a higher high, and these will be higher lows right here. So it will be acting like an uptrend. That's why I'm despite what I feel like we still have further to go drop, you can't ignore the characteristics of a trend. You've got to, as a trend follower, sometimes it's hard, because sometimes you get your own opinions and you get your own biases, but that's why we look at these little details, because that's what helps us change those biases and keep us from ignoring the trend. If we break out above here, that'll be a higher high. That'll mean these would be higher lows, significant higher lows, and that we'd have to respect the fact that it's acting like an uptrend at that point. And I've had these in the past where I fully distrusted the rally, and yet it kept going. And then what happens is you're part of the crowd. And what does the crowd do when they're not trusting the trend? They all start piling in. They all start chasing it. And sometimes, and that's why it's funny. I talk about, crowd behavior, and when we talk about crowd behavior, we always like to disassociate ourselves from quote unquote the crowd, right? We're not part of the trading crowd. We're observing the trading crowd, and those idiots are all chasing the move, and they're panic selling right now, and they should be buying. But the reality is that we're all get caught up in being part of the trading crowd. There are going to be times where I'm going to be chasing the trend. There's going to be times where I'm ahead of it. There's going to be times where I'm buying when everyone else is selling, and I'm selling when everyone else is buying, which is really what you want to be doing. You want to be when the trading crowd gets extreme. You usually want to be the opposite of the extreme direction. But there's that middle part it's difficult. You have a sell-off, and it's not panic selling. It's not where everyone's selling, and so it creates that gray area. Do you follow the crowd? Because there are times where you want to follow the crowd. As trend traders, we're following the crowd, basically, right? A lot of times we want to be following everybody else. But it's at those extreme levels that we want to be doing the opposite. And the key is trying to identify where those extreme levels are. And that's where it can get difficult. So the point I'm trying to make here is that these details are important. This kindergarten stuff I go over day after day, week after week, and some of you are probably bored to death hearing me talk about these same areas. They're important because this is what causes us to not to really focus on the trend and trend behavior and where the trend is actually going. Okay, and if this continues to stair step up, we pull back and we continue to have higher highs, higher lows, and we got to start adding positions. We got to start jumping in at that point, because that's the reality. That's what's actually happening. Okay, but until then, I can still look at this and say we haven't gone to a higher high here. And then, like I said, we'll see how today closes. But again, what I'm really cautious on is you look at what are some of the leadership stocks that you look at, like AMD, for instance. Look at AMD today. I mean, it hasn't even gone above. In fact, that could be a little bit of almost a bearish inside day. Not quite, but that's a bearish price action right there. Even Apple, it might have rebounded a little bit lately. Yeah, well, look at Apple. I mean, Apple is barely trading above yesterday's high, yesterday's close and high, basically, right there. So it's lagging, and you think, well, why? Why are these strong companies that everyone knows making money? Why are they really lagging on a day like today and not participating? And the strange thing is the Qs, though, which these stocks are, well, AMD is not part of the NASDAQ 100, but it's part of the tech sector. But the Qs are trading above that high. They're not looking as strong as the S&P, but so a couple other ones in here. Let's look at NVIDIA. Yeah, NVIDIA is struggling to get to a new high. I'm just looking at leadership stocks. Microsoft, again, it's not trading above yesterday's high. I mean, we can jump ahead to, usually we'll look at the SMH, the chip stocks. Remember, these are the leading indicators. You're typically leading the way, and again, it's lagging today. So this is one of the reasons why we might get a little bit of a sell-off into the close, and maybe get that reversal that could end up taking place. But it also is a reason why, again, it's hard for me to trust the trend. Now, this could change very quickly. It could be that money is pouring into other areas. It is going back into energy. A lot of the energy stocks are up today. And it could be that tomorrow it's a big tech day where small caps and chip stocks and all these Apple and all those other companies really start taking off. And if that's the case, then I'd really be confident jumping back in at that point. All right, so the S&P. So those are the key areas there to kind of keep an eye on there. This is the next. Let me give you a number on that. This is the March 3rd high, and it is at basically 441. A little over, the high is a little over 441, but just a round number there, that'd be 441. Now, see, look back here though too. We had this big bullish reversal day, a big follow through day, and then it started to lag a little bit, and then had that next drop. I think that it closes above yesterday's high is going to be really significant because we haven't had 3 up days in a row for quite a while, since back here. But by the way, you can go back here and say, you can see why sometimes I don't always trust the rally. You had 4 straight days right there where it rallied, stalled out, and then you had this big plunge right here. It just, you wonder if it's setting up again for another move down. We'll see. I mean, and we'll probably be able to comment in the next class. We'll probably know a little bit more about how things are looking by next Tuesday. All right, let's go through a couple others here. IWM, Russell 2000 is one to watch. On this one, again, these are just reminders. You're all familiar with these lines I've been drawing lately. But this one you want to pay attention to, this area right through here. This was the support of that sideways range we're in most of last year. If we get back into this range, that'd be more bullish for the market. And that would really cause me to be more bullish overall too, because that means the small caps are now participating. Remember, they tend to be a leadership group. When money is pouring into small caps, it means that those professional traders are willing to take on more risk, and they're usually going to do that in more of a bullish type condition. And so that's right around that 209 area, 210. Gets above 209, 210, somewhere in that. I'd say about 210, just to be safe. Gets up above 210. Bonds, again, on Tuesday, this is one of those I was talking about the possibility of. One of the reasons why I felt like we could sell off a little bit was that bonds were at an extreme, and bonds tend to be a little bit of a safety play where when the market drops, money comes out of the market, tends to go into bonds. I thought it was setting up pretty nicely for that. It did have a little bit of a bullish reversal candle yesterday. It's still oversold. It's come off the extreme reversal risk. Remember, on Tuesday, it was all the way to the far left side. It's come off of that a little bit. And that's something worth noting, though, too, is that when stocks are extreme like that, it doesn't always mean they're going to rally. It means sometimes it could mean they just move sideways. Maybe we see the TLT just move sideways right through here, alleviate that oversold condition, and then maybe it has another move down that pushes it right back into that oversold condition. The bottom line is it's still in a downtrend, and we recognized that on Tuesday with that lower highs, lower lows. But what we were anticipating was the possibility that we could get a bounce just because it was in that extreme oversold condition. It might just be a bounce within the downtrend, but it was due to have a little bit of a bounce based on or move sideways like it's been doing based on that extreme condition there. So we'll continue to keep an eye on that as well. Gold has been beaten up. It's rallied a little bit today, and what's good here again is that relationship between commodities and oil, which I talked about. We're kind of back to the normal. When commodities are up, the dollar is down, and and that's what we're seeing here. Oil is moved up pretty nicely today. And I talked about this on Tuesday too. Although this looked like a pretty sharp move down, I felt like, and maybe I'm wrong. Maybe this is just a rally, and then we're going to head lower again. But I just felt like that demand for oil doesn't just change overnight. It doesn't just typically disappear overnight. And so I still think that these stocks could rally, particularly the oil stocks themselves, because even if the price of oil comes down, they're still making a ton of money at these prices. It's well above their break-even point or what have you. So they're still making a ton of money, and so the oil stocks themselves, I think, should and have a good opportunity to continue to rally in these conditions. Now, I do think if there is a ceasefire or an end to the war, that you could see oil come down pretty dramatically, because traders are always forward-looking. And to be honest with you, I would love to lose money. I would gladly lose money on my oil trades if it meant peace in that area. I feel so bad for those Ukrainian people right now, and what they're going through. I'd gladly sacrifice oil trades for their lives. But all right, so then the dollar right here, though, you can see has been down. So we've seen that spike in commodities today, and oil's moving down. I like that. It's a normal relationship there. It makes more sense. And remember, the problem with the dollar rising and commodities rising is that keeps up. That can lead to a recession. I wouldn't say that we're out of the woods as far as that concern is. We just had that Fed rate hike, but there's still a lot of concern that the more aggressive rate hikes will have to come, which could put us right into a recession. I'd hate to be those people making those decisions, because it's so hard to navigate. There is really no. People talk about soft landings, and it just never seems to be a soft land. There's never seems to be a soft landing. We always tend to overdo things. In fact, it was a little bit comforting that they didn't go heavy with the rate hikes right away, because of that fact. There's a lot of times that we tend to overreact. I'm hoping this is one of those cases where just taking a small action of at least initially here, hopefully they're not too far behind to where it doesn't just slam the brakes on the economy. Now, there's a possibility that this is an ABC pattern here with the dollar, and that we could see the dollar continue to rise. And it could go right back to oil rising and the dollar rising. But we'll keep an eye on that. We'll see if that relationship is still intact. We'll be able to see that on Tuesday. Now, the VIX has come down here. And now with the VIX dropping like this, and the market and the S&P going higher. Remember, you're always comparing the VIX with the S&P 500, not any other indexes, because that's what it's based. That's what it's based on. The implied volatility of the S&P 500 index options. The fact that the VIX has come down is normally a really bullish sign that it's come down so dramatically with the market breaking out. The reason why I'm skeptical of this, and I'm trying not to be just look for reasons to be skeptical, because I want it to back up my own conclusions or my own expectations. But I remember distinctly last week, it might have been earlier this week. I don't know. I can never get my days straight. They all seem to fly by. But I remember distinctly, it might have been Monday, that there was a huge trade, multi-million-dollar trade placed on the VIX, and it was betting the VIX going higher. Now, obviously, if the VIX is going higher, that means the market is dropping. So this person, and because the size of the trade, it was assumed to be a institutional trader, someone with big money. Heavy bets that volatility is going to increase. Now, at the time, I remember thinking, well, that backs up my belief that that we're going to get another drop. I didn't see enough in the markets where I would have taken that big of a bet right then in those conditions. I would have wanted to see a little bit more evidence of the price action that we were dropping. But I remember that huge bet. Well, the problem sometimes is when especially when that gets announced on CNBC or other news outlets that many traders follow, people pile in on those same trades. I wouldn't be surprised if there were a lot of other people, retail traders, that did the same thing. They all piled in on volatility, betting that volatility is going higher. And what can happen, again, when the crowd gets too far to one side, the opposite can happen. And what could be going on right here is that the volatility is crushing those longs. Those people that were long volatility are being crushed right now. They're being squeezed a little bit here. They're panic selling to get out of the trade that they're heavily betting it was going to go higher. And that behavior might be what's fueling the rally, because just like I've just told you, with volatility dropping, as a trader, you'll see that and you say, okay, that's bullish. That might be fueling some of the buying today in some areas. Again, some of this is, I'm just speculating here, but it's how my mind kind of starts working on some of this stuff. So in other words, instead of the market going higher and thus volatility and the market going higher and complacency coming getting stronger, meaning that worry about, remember the VIX is a level of the nickname I give it, or the layman's definition I give it, is the level of freaking out by the institutional investors, right? It measures the level of freaking out of the institutional investors. When it's spiking, it means they're freaking out. When it's dropping, it means they're not freaking out, or they're fine. If an institutional trader was betting on the VIX, now if he's trading the VIX and now it's going down and now he's having to sell that position, and that's causing the VIX indicator to drop, that could be what other traders are looking at, saying, oh, the VIX is dropping, that's good, let's go buy right now. In other words, it's not buying based on expectation that those or confidence those stocks are going to go higher, but it's based on this trade that's being unwound on the VIX. I don't know if that's making any sense or not, but because typically it's the other way around. Typically it's the VIX is dropping because people are buying into the market, and it's naturally causing the VIX to come down. There wasn't a heavy bet on the VIX. Maybe I'm confusing everyone, and hopefully I'm not. But the bottom line is that it's adding to my lack of trust of this rally, and it's something that it's because it was a news item earlier in the week, or again, it might have been late last week or early this week, before all this happened anyway, that I remember this big news item of this big trade on volatility. It's a trade on volatility, which you don't hear about very often, especially not being televised on CNBC. So I don't know. It's just weird that, and it makes me wonder if this is part of what's causing that. And what adds to that again is you go right back to the leadership groups I just showed you, Apple, Microsoft. They're not participating in this very much, and that's odd. That's just really strange. All right, so the other SMH chip stocks, I've mentioned this one as well. Again, you can see it's lagging to even get above yesterday's close. Also pointing out on the SMH is that it did trade below that big bullish reversal day back there on February the 24th. Hold on here. Bring that back up there. So we've already been below it. We've had lower lows even. And these are the chip stocks. Now, it did have a good it did have a good 2-day rally right here, but again, that's kind of worrisome right there. So anyway, those are things to kind of keep an eye on. All right, let's get to the individual stocks. I'm going to spend most of the time just going through the watch list. These are stocks that we've already analyzed, we've already talked about, we put them on in the watch list. If we're not going to do anything with them, then why even have the watch list? So let's see if we can find some opportunities. Now, there are a lot of these that are in the energy field, energy sector. Some of these look better than others. With as far as the energy stocks, I kind of prefer some of the ones some of the ones I've gotten into. For instance, in the portfolio here, on Tuesday I got into CLR, OAS, and BTU. In fact, let's take a look at those. Let's see here. This is okay. So this is BTU. Trading, it had trading off the highs right here. I like the bullish reversal candle. That's why I got into the trade on Tuesday. My stop is pretty tight. It's below that. And so, the price action today on BTU isn't great, but, it's still, as long as it stays, it doesn't, if it wipes out that bullish reversal candle and gets below there, I'd want to be out. It can dance around a little bit in here if it wants to. I'm still okay with that. But I like the overall bullish pattern here. It has that bowl-shaped move. It broke out of it, came back to it. And so if we get down below that low, we're down back into the bowl here, and that would be bearish as well. We shouldn't get back into that. OAS is looking pretty good the last couple of days. Again, had that bullish reversal candle. Had a little bit of a up day yesterday, and then it's kind of followed through. And so far it's pretty close to the highs of the day, so that's looking pretty good there. I've got my stop down below the low of that bullish reversal candle right there, and it's pretty tight stop there, or was a pretty tight stop where I entered. And yet it still gives it room to kind of move around a little bit. And then CLR, this is one I've liked, Continental Resource. Nice move up today, a little bit of a move up yesterday, but again, it's all based off of that bullish reversal candle on Tuesday. It looks like we're, maintaining higher lows, had a higher high here. Looking to see if this can go to a higher high. So those are all ones that I definitely like. SD is an oil one. I don't like the way. You'll notice on some of those oil stocks, they kind of had a little bit of a choppy pullback. This is a straight pullback down. That worries me a little bit. It looks more impulsive coming down. Here's BTU. We're already in BTU. Oh wait, is this going through portfolio? Let's go through the portfolio ones. Let's go back to watch list here. Same with CDEV. This is an oil stock too, but again, that moved down. It actually went to a sell signal. A little impulsive. Also went to a lower low right there. So I think there's better oil stocks you can get into. In fact, I probably ought to boot some of these out. They do have high strength ranks. Don't get me wrong. They're up in the 90s strength rank. This was not too bad. SM again, it doesn't look so impulsive on the pullback. Had it moved down, it bounced a little bit, so it looks a little bit more like an ABC pullback. It looked like it had that bullish reversal candle. It gave it a higher low, so it didn't go to a lower low. Nice move up today. It's right at that breakout area again. If we get back and below that breakout area, that's pretty bullish. So this is one I like right here, SM. I apologize. I have to keep clearing my throat. I love spring, and I love when the weather starts getting warmer, but, man, those allergies just kill me. And I guess that's the only benefit of living in an area where you get a pretty cold winter, is it gives you a little bit of a break from allergies for a couple months. But they're hitting me pretty hard today. All right. AR, this is another oil. This looks good. It's maintained that buy signal, but this looks like a little bit of an ABC pullback right here. It's really looks like it's outperforming, looking pretty strong. That one looks good. FIX, this is building products, air and heating. Comfort Systems USA is the company. You had this big pullback right here, and then it looks like you've got a little bit of a possible inverse head and shoulders pattern, and then it could be breaking above the neckline there. So this is looking like it's kind of moving up the right side of the bowl. I do this a lot, and just because it looks like it's moving up the right side of the bowl doesn't always mean it does continue to move upside the bowl there. But if you take the last low, which is right here, that's a higher low, put a stop down below there. There's potential if it is rallying back up, it can get back up to that 103 area, possibly. And so, it's not a terrible reward to risk, especially if it breaks out and goes higher. It's not a terrible reward to risk here. There's others I like better. In fact, the two areas again I'm gonna say is oil and energy and defense are the biggies that I think you'd want to be in right now or consider right now. HSON, we've been in this one before. It's gone back to a buy signal, a little bit of a pullback right here. It was up a little bit higher. It had a little bit more of a hammer or candlestick formation a little while ago. It came back down a little bit here. So, but I mean, it's higher highs, higher lows. It's kind of just still kind of trending higher there. It has a buy signal, so it's not too bad. LPI, I don't like this one with the more of an impulsive move down, went to a sell signal on the lower low. Probably there's better energy stocks out there or oil stocks out there. Now UPS, this one's a little bit interesting. I remember this is what I love from a long-term perspective. And it looks like it might be breaking back out above there. Man, I wish I could trust this uptrend more, because that is a nice little breakout right there. And if you're a lot more bullish than I am, then you can, some of these stocks that I like it. I don't expect everyone to share the same opinion as me, and that's because no trader's always right. So, even there could be smart traders that are wrong at certain times and they're right at other times, and that's what every trader goes through. And if you're a lot more confident in the rally the last couple of days, well, these are companies you'd want to be jumping into that look like they're breaking out. So OAS, I'm already in this one, but that one looks good. MDTR or MTDR looks good. It's another oil stock. Pullbacks, going back to a buy signal today, broke out of this area right here. So it broke out, retested it. one's interesting. And it's hard for me to jump into more oil stocks. I already am. I'm already all in on oil stocks right now, so I don't want to have somewhat of a balance in the portfolio. So there's a CLR. I'm already in that one. That one looks good. You could just trade the oil ETF, USO. Nice rally today. If you think it's going to come all the way back up. Marathon is one that I like. BCC. Alcoa's not looking too bad right here. Although, boy, it wasn't really a lower, it didn't go to a lower low, but it was coming all the way back to an even low. What you have to worry about a little bit right here is if it does fail to go higher, you do have a bearish head and shoulders pattern that could drop. So just keep that in mind. But we'll see. If it goes up higher than this, though, it would take out that, it would make that bearish head and shoulders pattern less or more unlikely. I want to get down to the I want to get to the defense stocks. So what was I talking about as I went through this list? I remember I said you want to have this list ready. I said it's probably early. A lot of these look like they have another move down, and sure enough, you had this move down and it was moving sideways. And so I said it should probably have another move down. Well, you got that yesterday on all these. You got a nice move down back to the breakout area. You could wait for it to go back to a buy signal, get a little bit more confirmation on some of these, but they're in a nice area right here. This is a nice pullback, and this is a great time to be looking to get in. This is Northrop Grumman. This is Lockheed Martin. Again, same thing. Looks like have that sideways move. Looks like an ABC pullback. Now, these have faded a little bit, but they had, before class, they were up here near the highs of the day, and that was a bullish inside day if it were to stay that way. Had the big down candle, and then you had the bullish, it opened down here, and it was trading up here. It was a bullish inside day reversal day. So you have an ABC pattern, you get a bullish inside reversal day on wave C right there, or potentially wave C. That'd be a good entry signal. And so you might want to watch that going into the close if you are planning on getting into some of these, to see if they can get closer to the highs of the day and have more of that bullish inside day. If it doesn't, if it fades all the way into the close, it may still possibly have a little bit further to drop. But yeah, a lot of these have given back. This is a little bit, it's come back a little bit, but this is a little bit better example of that inside day. You had the big down day. This is LHX level 3. Well, it used to be level 3. Was it now? L3 Harris Technologies. I know it merged with somebody, but has that bullish. So far, it looks like a bullish inside candle. It's pulled back again to that breakout area. These are just looking really, really nice. General Dynamics. My favorite, though, because I like the story behind this one as well, is Raytheon, RTX. And the reason why I like Raytheon probably the most is that, what's the big news lately is that we're going to be trying to send Ukraine weapons. What were the weapons being mentioned? Well, the Javelin missiles, the Stinger missiles. Guess who makes the Javelin and Stinger missiles? It's Raytheon. Now, you've got to be careful with these announcements. I can't remember what the dollar amount was, but it was like it was like I can't remember something, $100 million or something like that. Some of these, the dollar amounts with the amount of weapons they'll get for it is maybe not as, if a lot of these missiles are like, they're, I don't know. I don't know. The point I'm trying to make is that it may not be that the request is that really that large, and it sounds large sometimes, and that's what politicians do. They make it sound like they're doing a lot when they're not really doing that much. So I don't know the details of that. That's why, just because they're announcing they're sending weapons, and I don't want to go jump into Raytheon. Maybe they're sending they sent them 5 Stinger missiles and 10 Javelin missiles, which is not going to do a whole lot. And that's not going to cause the company stock to skyrocket in any way. But it goes back to the world is becoming more unstable with what's going on, and now there's worry about nuclear war. There's worry about China getting involved, and anytime that happens, it usually benefits the defense industry because people are willing to allocate that money. When people get scared, they want to make sure they're protected, and so that's why I like this sector, and I think there's room for this sector to still continue to run. All right, so I'm gonna add RTX to my portfolio. It's not quite at a buy signal yet. You could wait for that confirmation. It probably has a little bit of another update or so to get there. I'm going to put my stop down here. Here was a reversal day yesterday where it came off the lows, and there's a low right here, but that's a little bit too tight. Having it down here at about 92 puts me below the breakout area. If we come all the way down to that, I'd want to be stopped out of the thing. Question: when you get in these trades, how long could you generally be holding them? Well, the way I typically trade these, well, this is where it depends on how much trading knowledge you have. Okay, it really does come down to that. You could go off of just signals, and by the way, there's no perfect way to manage a trade. So there's a lot of different ways to do it, and the way I tend to do it sometimes is not. And I tend to be I'm a shorter term trader. Most of the time, that's where my expertise is in. So I tend to see price action sometimes that I know that stock is going to drop and probably drop for a few days, and so it's hard for me to just hang on to it when I know, even though I should have a longer time horizon for the trade. It's so hard for me to hold on to it and give back profits when I know I'm about to get back profits. So sometimes and knowing I can jump right back in it again too. So I sometimes will make decisions that somebody else might not make. You could go right off of the signals, wait for this to go to a buy signal, and then when it goes back to a hold or goes to a sell, you get out. That's really what the software is designed to do, to keep it that simple. But you can get better results if you know how to manage trades, because by the time it gets to a sell signal, it could come down quite a bit. You'd be giving back a lot of your gains that you've made by the time it goes back to that sell signal. What I tend to do is a combination of trailing stops and reading the price action. So, for instance, I'm going to start my stop right down below here. Again, this was kind of a bullish, not the strongest bullish reversal candle, because it didn't close higher. It still closed lower than where it opened. But if we can rally up from here and get above some of these highs right here, what I'd probably do is then move my stop right below that low. And then let's say it pulls back again and then takes off again, then I'd move my stop up below that last pullback there, and I'll just kind of trail it on those pullbacks. Now, some people on a trailing stop will just trail it by a certain percentage. They don't want to wait for each of the pullbacks and do it based on the chart. And so they'll just use like a 5% trailing stop. If the stock drops 5% off of its highs, it's going to stop them out, and it just goes and goes and goes and goes until it drops 5% off its highs. So you can, almost every broker out there will allow you to put in a percentage trailing stop. You could use that. I have a whole training on this, by the way, in those. If you go to Traders Pro, go to the YouTube channel on Traders Pro YouTube channel. There's trainings on trade management. There's one, I did a whole class on trailing stops and different exit strategies and things like that. So you can go back and review some of that. But I could be using a trailing stop, and then let's say it gets up near these highs and it gives me a bearish reversal candle like that. This is where sometimes I'll just say, I know this thing's going to pull back. I had this nice big move. I don't want to give it all back. I might just get out. The stock is stretched. It's overbought. I'm getting a bearish reversal candle. I mean, all these things I teach you in class, I'll see it. I'll be like, I can always get back in if I'm wrong, but I don't want to give that back. I'll jump out of some of these things. So, and that's what I try to do in running the portfolios. I'll explain to you why I'm getting out or why I did get out. I try to go back and show you, so I can kind of teach you, even if it's teaching in hindsight a little bit, because we're not meeting every day. So I can't, I might make a decision to get out of a stock when we're not having class. But yeah, that's kind of, that's at least the starting point of the trade. Is I'll put my stop down below 92, and then I'll probably look to trail that, keep moving it up if it keeps going up. So I'm going to go ahead and add that to the portfolio. Put my stop at 92. 100 shares would be right at 9,000. Let's see, what's the portfolio risk is really small, so that would be fine. So let's go ahead and do that. Now I may add another one. Based on which, if they have a strong, maybe LHX or LMT. LMT is looking a lot weaker though than it did earlier. NOC, yeah, it might end up being LHX. We'll see how it looks at the close, and see how the S&P looks at the close too. Is it fading at all, or is it going higher? Yeah, it's off the highs, but not necessarily fading much yet. We'll see how that looks. A lot's been happening in the last half hour of the trading day, so we'll keep an eye on that. All right, so that's really it for today. We did. I think I do like these stocks that we went over. I like the one I got into, and we'll see if those can continue to. Got a lot of cash still available, but I wanted to get into something today because, again, although I don't trust the rally very much, I'm not going to lose very much if I'm wrong on this, and the chart still looks fine. But it's also forcing me to not get so caught up in my bias because of the fact that the SPY did break above those levels we were watching. I mean, it did get above 428. Did that yesterday, and it's back higher today. So, but I'm also not going to go crazy yet. And like I said, I'll make a decision maybe to add one more of those defensive stocks if the S&P closes where it's at or higher. I'll go ahead and add another one. I don't have a problem doing that. I shouldn't get, if I get stopped out, I'm not going to lose too much. So I don't care about that so much. It shouldn't hurt me too bad. On the other hand, if it does continue to move up, I'm gonna profit from it. But again, notice what I try to focus on is the strong, particularly with oil, the stronger sectors. When the market is showing that it's strongly moving back up and the trend looks really confident, and I have a lot of confidence in the uptrend, you'll see money start pouring into all those stocks that have been beaten up, and we're going to start seeing computer and technology move up the sector list, and we're going to see the small caps outperforming. We're going to see there's going to be evidence that traders are moving into the risk, that those big institutional traders are taking on more risk. But until then, we want to kind of focus on what the stronger sectors are doing and the stronger stocks within those sectors, and continue to kind of focus on those. All right, that's it. Thanks, everyone. Have a great week. We'll see you on Tuesday for the next market update. Bye now.